Hi everyone, it's Mark here at TSLA, and Tesla closed very slightly in the green, just barely. $238.82 was the closing price, and that was a share price increase of 23 cents. And then percentage terms, it's just 0.096%. And that comes from an opening price of somewhere in the range of $244.38. And it fell right off the bat precipitously down to $235 about intraday, and that was a 3.71% reversal intraday, and it was definitely underperforming the market yet again. And you start to wonder with moves like this, like, we're not surprised, right? Like, I posted about this on Twitter before the markets opened, and I'll just switch to the browser real quick and you'll see that I wasn't surprised at all. So one of the people I follow on Twitter, he's just kind of a funny guy, but he was talking about how the futures are always up lately, and you're seeing that. You're seeing futures on the S&P 500 gapping up, even just barely sometimes, but gapping up, and sometimes it does sell off before the market open. But when it does gap up, Tesla's going to be up like 1.5% or something like that in the open, and it is sold off every single time. It seems like maybe just except there was an exception last week where it had that pretty monster day, like 7% day, where it didn't close the gap. But I posted in a reply, wait, so you're telling me that Tesla will gap up only to sell off into the negative by Wall Street's lunchtime? And it did exactly that. Like, I mean, I'm not surprised. You shouldn't be surprised. We talked about this a couple of weeks ago. This type of price action, when like you see the opportunity to go short pre-market, you just have to take it sometimes, because there is no positive sentiment, regardless of what retail investors might think are really hyperish, bullish Tesla personalities on YouTube or Twitter might lead you to believe. No one's buying the stories of what makes Tesla an interesting investment for you or for me. And I kind of see it both ways, where, I was there with Elon, when he was streaming his FSD 12 beta, like kind of exhibition drive in Palo Alto last week. And, I was really excited about what he was doing. But the price action doesn't reflect it as the day went on, right? Like, it was just maybe some enthusiasm from individual retail investors, buying a couple of shares in a very low volume environment, which was the pre-market or the Robinhood 24-hour trading, or the futures market, whatever you would consider pre-market trading. It just wasn't a view that was held in the same weighting by Wall Street, by people managing money, by traders. There's a disconnect between what you and I see and institutional people, Wall Street types. They just don't buy it. And the thing about it is, and I've talked about this before, they don't have to be positioned for this move. I think it's gone to show over the past weeks or months that they're not going to miss out on the move. Like, as much as you might think that you need to be in this stock to catch this move for that move higher. I mean, we saw a 7% move last week, and that was faded. You could have got in for a couple percent discount and possibly ride the wave up from that point on. Like, you don't have to be positioned. So if there's maybe a fallacy in the way that people think about explosive moves in a stock, like, yeah, I mean, let's say in one day, there was an announcement that full self-driving has been approved by the regulators, and the National Highway Transportation Safety Board has approved it for use all across the country. Maybe Tesla stock goes up 10%, 15% in one day. Okay, but why can't you just buy it at that point? I think most professional traders, they wait for the breakout to happen. They're not trying to buy before the breakout. Like, they're not going to buy before an earnings reports come out. Maybe they'll buy 2 or 3 days after the earnings report comes out, and after the price settles a little bit, maybe go along with options after the volatility comes back down. Like no one's that really does this for a living is going to be pre-positioned for a move that they don't know when it's going to happen. But maybe they'll kind of scale into positions when it is relatively cheap, or if it's getting to the some indicator they're using, like if it's touching the bottom area of a range, or if it touches a volume weighted profile. So just know that when you're looking at what I was looking at last week, you're looking at this matured AI. I don't know what to say. It's program or model, but this AI trained model was driving Elon's car through a college campus at low speeds with bikers, pedestrians, like all types of different intersections, and it did great. And everyone that was on like whole Mars blog, Twitter spaces, like I was there when Elon showed up before he started driving, and he was taking a couple questions from the moderators, and it was a really great experience. And it's really cool to see and hear the richest man in the world talk about this new product that's going to be coming out hopefully soon. But isn't it interesting how none of that translates to price action in the way you think it would translate? Meaning that there's a move up, 2% move up, before the stock market opens, and fades within minutes, and you probably are at a loss. You're like, look, we are waiting since Friday over the weekend. Like, this is going to be a great Monday. And I've heard, I was listening to people's YouTube videos and people posting on Twitter how like this is the next catalyst for the move up. I mean, like the next catalyst for the move up this week that we're in is when it's like, from a seasonality perspective, one of the lowest volume weeks in the whole year, going into one of the worst performing months of all time. September actually has more down years, and I can switch over to a browser and just show you a tweet from Carl Quintanilla from CNBC. And Carl says in this tweet, from the CFRA, prepare for the possibility of disappointing results for both the S&P 500, the NASDAQ in the month ahead. Since 1945, September is the only month to see the S&P 500 decline in price more frequently than it rose. So the majority of the time, September has performed worse than it performed better. So we just had the doldrums of August. Like August is known to be a pretty volatile time because that's the last month before people can go on vacation with their kids, and even this week, this is their last chance maybe before, in certain school districts, before school starts, they want to have their kids going to on a nice trip, or they're preparing for the kids to go back to school, and they're just not really concentrated and on trading or whatever they're doing on their Wall Street jobs. They just have their interns working for them. They have their algorithms going for them, and maybe they're not really, maybe they're delta neutral. So if they're delta neutral for this week, which is not uncommon, where on pretty low volume weeks, be it a holiday like Christmas or something like that, they're not interested in seeing large movements in the stock happen. But we can also say at the same time, like, well, that might not be the case because the NASDAQ, when it was up 0.75% of a percent today, and Tesla was only up 0.09%. Like, Tesla underperformed the NASDAQ severely. S&P 500 outperformed Tesla. All the mega cap names are outperforming Tesla. But Tesla came into this last weekend, with this great exuberance for full self-driving and AI. And I mean, just kind of think about it though. It's like, you hear about all these things that you'll find from really hyper bullish people, for instance, and say, okay, Tesla's making a new factory in possibly in India or or there's maybe expanding their production in Berlin or Shanghai, or they're going to make a factory in Mexico or Spain. Of course, the Mexico thing is probably happening, but why would that make the stock price go up? Like, why would you think because they're making a facility somewhere, the stock should go up? Well, you can tell me like, well, obviously they're going to make a new car there, or they're going to have more volume, so they're going to have more cars to sell. But the question begs to be asked: who's going to be buying all those extra cars? Is there a market right now in a high interest rate environment that the idea of more cars being available for sale is great for the stock because what, people have access to cheap money? No, they don't. Like, if you're going to buy, an average person with average credit in America might have to pay over 8, 9, 10% on a loan on a car. And sometimes those term lengths are like, 7, 8 years to get some type of affordable monthly payment. But they're still kind of questioning to themselves, like, it wasn't but 2 years ago, I could get the same payment for a 5-year term or a 4-year term. So why would it be that, okay, we're going to make a factory, this is great for the stock, this is a new catalyst for the stock, and it's going to go up. I'm like, it has to prove itself that the demand is going to be there for those cars. Like, is it not surprising? Maybe it should be surprising that the factory in Mexico is barely moving in as far as, like the actual buildup of the factory and the clearing of the ground and setting a foundation. I'm like, well, okay, why would they rush that? Like, okay, but we need to get that 3rd generation vehicle out there so, people who don't have a lot of money can afford a more affordable car. Well, number one, you don't even know what type of market this car is intended to be for. The reality is that in America, we don't like small cars. We just don't. It might be more affordable. It doesn't mean we want it. Like, you can buy a smart car. It's really tiny. It could be cheap. It doesn't mean you want it, and you might be willing to wait. I mean, there's so much more incentive to wait because interest rates are so high. And think about it like this. Like, and these can be like real world examples. If Intel says to you, let's pretend you're an Intel investor. Intel says to you, we're going to make a new factory. We're making a new factory in Germany. They've given us billions of dollars in subsidies, and we negotiated for, a great deal for investors. Okay, like, just because you're making a factory doesn't mean your stock should go up. We don't even know if you're going to make anything good and people are going to buy it, right? Like, it doesn't make sense. What if ExxonMobil says to you, we got a permit. We've been waiting years for it. We're going to build a new refinery over in Louisiana. Okay, that's cool and all, but is it going to mean your stock's going to go up 20%? So why is it that if Tesla is making a lithium refinery in Texas, that's some catalyst for a move up? Like, okay, you're building a refinery, great. That's really, really good. And maybe that you can use that as a way to leverage, maybe getting cheaper lithium contracts in the future, or just kind of showcasing like, look what we can do, get more subsidies from the government, maybe build more lithium refineries as well. That's fine. But is that like a catalyst to make your stock go back to all-time highs? It's not. It's really not. With lithium prices coming down as well, like, is that even relevant? It might not be. We really don't know until you see it play out. But, the amount of lithium that refinery is going to make is not going to supply lithium for every battery in every car that Tesla's going to make. I don't mean to like be a real downer, but, I just want people to get back into the reality of, the way the world sees your stocks, my stocks, as, majority Tesla investors, is not, there is a humongous like gap in the valuation of how we see Tesla's valuation and they see Tesla's valuation. Like, how many times have I see, like, just scrolling through YouTube, it's like, okay, Tesla's going to be $1,500 within like, 3 years or something like that. I'm like, I'm not saying it's not. And if it does become that much, that's freaking great. We're already seeing Cybertrucks being produced, like 9 or 10 a day, Sawyer says. But why would that move the stock? We don't even know what the pricing on those things are going to be. We don't know if those vehicles are actually like production vehicles ready for consumers, or they are just like testing vehicles for their software folks or crash test folks. We don't know because there's no communication from your CEO. Now, you look at what Elon was doing on Friday, and he was kind of like talking shop with, all the guys and all the girls listening to the stream, and, going into like really like in depth with the AI tech that they're trying to deploy. And that's great. But that's the stuff that he should be doing more routinely. Like, we should be hearing about Tesla more routinely. There should be a conversation that he's fostering on Twitter or X about his main company, which is Tesla. Right? Instead, we get things like, we don't use leverage when you're investing. Or like, yeah, like that's great. I mean, that's really good advice. But we don't want Elon like investing tips 101 on an earnings call. What we want is a conversation of Tesla, the Cybertruck release, the Model Highland. We want to know about that kind of stuff that would really move the stock. Like, okay, like what if he's like, okay, the Cybertruck's going to have X hundreds of units being produced every week at this dollar amount, and we're ready to go at the end of September. That's going to move the stock. What if it's like, okay, guys, we're going to discount the Model 3 a little bit, but for one reason alone, in October, we got the new Model 3 Highland coming out. It's coming out for the American market, for the Chinese market. It's, it has gigacasting, so we can, maybe save on cost. It's going to have a new motor that doesn't use rare earth elements. So, we don't have to be reliant on sanctions or what have you from the Chinese government. Those are things that are really interesting and real relevant and material to the movement of the stock. But full self-driving and AI, that's great, but it's not. You don't even have a date on when it's going to be released. It's going to be released at the end of this year. Does anyone believe that? Do you believe that full self-driving in its version 12 AI, completely neural net form, is going to be released by the end of the year? And look, I want it to be released by the end of the year. I have my whole net worth almost tied up in the shares of this company. I believe what they're doing. I think it's good for the world. It's good for our future. It's good for your children's future, right? It's a catalyst for other companies and other individuals to be inspired or to better make their company better, produce better products for the rest of the world as well. For the health of the climate and what have you. It's all great. But the disconnect still remains. And now we can talk about hedging. We always talk about cover calls, but I want just to remind you guys, and I'm going to delete some of these drawings now because maybe they're not really relevant. We're still pushing it up against 239. We still closed in the green, so technically we didn't make a closing low. Did we hit intraday lows that were kind of Yeah, but you found a base off of very typical prices, which is 235, which is just a strike, for puts, and it creates a temporary floor for the day. It's not really relevant because we're not close to expiry, and so it bounces off 235. And it has huge problems with 240, and those huge problems with 240 have persisted for weeks, maybe a month. We'll probably have problems getting through. I don't know. We opened above it and immediately sold below it within less than 10 minutes. And we flirted with 240 and got rejected over and over again, and then got sold off, much more than the market was selling at these particular times. This general double bottom looking pattern is very similar to what the S&P 500 had on its intraday trade, and we can take a look at that. So here's S&P 500, and it has that kind of double bottom shape. But look, even in the after hours, there's people interested in buying the S&P 500. Tesla, not so much in the after hours. It's down 40 cents in the after hours. But okay, I want just to look at one thing, is how predictable the price action is always going to be. Save a couple days where it didn't work out, but typically it does. So we'll just use our little measuring tool. It gaps up today. It sells off, within a couple hours, 3.79%. So if you would have, we talked about TSLQ. TSLQ is the one-to-one inverse ETF of Tesla. So it just basically acts like a short. So if you don't have the ability to short, you can buy shares of TSLQ. And this is where I think margin comes into play, where I don't recommend margin to anybody unless it's protecting your downside. And unfortunately, even though I recommend that, that's not financial advice. I'm not a financial advisor. Don't listen to me. Ask someone who's qualified. But if you are using margin and you are trying to go doubly long, it's a mistake. Now, especially if you're using options. If you're using options on leverage and you're long the shares, you're quadruple 1,000, super long, and when it goes down bad for you, right? I think we probably all experienced that plenty of times with the stock, because over the past couple of years, the stock hasn't really had a trend that's really positive. So, but let's look at this. So if you were sitting there and it was 8:45 a.m., 45 minutes before the open, and Tesla's at $242 a share or something like that, if you would just buy TSLQ, or even just buy it at the open, let's say you had orders set for a really cheap TSLQ order at the open, so it gets filled, and you're getting a maximum movement, and you hold for 2 hours, and you honestly you didn't even need to hold that long. If you just held for like 10, 20, 30 minutes at the open, you'll get a 3% move to hedge most of the downside of your stock for that morning. And you sell and you're up 3% and you're good. You can go through your day. You had a great trade. Okay, but trading is like it's a tough. There's not many people that can make money trading, right? Like trading is really, really difficult. But if you're looking at what the trend has been for weeks, over a month on Tesla, let's look at this open from last week. Okay, it opens up and it drops by the morning 4.4%. Right? That's 1 hour within the open. That's 1 hour. Okay, what about the day before? How about another day last week? In a period of 2 hours and 30 minutes by Wall Street lunchtime, always by Wall Street lunchtime, that's where the bottom is, because they're getting back from lunch. Like, okay, our algorithms, they've protected us. They just diddled around. Perfect. I'm ready to buy a little bit of stock. They buy a little bit after lunch, and it goes up, right? But so on this day, last week, it gapped up pretty big and completely sold off. And if you would have just bought here some TSLQ, you would have caught a 4.5% move. Now here's the one exception where there was a big gap up on that day. This was a 7%. I'm sorry, I should use a ruler. It was a 7% probably move. Yeah, it's like almost 7% move. And it had a little retracement. So you could have maybe shorted that at lunchtime. But it seems like once lunchtime is over, you can see here, the red ends at 11:30, right? That's why I tweeted about Wall Street lunchtime in the tweet I showed you from my Twitter account at the beginning of this video. Wall Street lunchtime. Here you can see the same thing here. The red candle stops at 12 o'clock on the dot. And the same thing kind of happened today. So the red candle stopped here, 12 o'clock, 12:15. What about this candle ended at 10:45 and this one at 10:15. So you can almost say to yourself, like, if it has a strong move in the pre-market, you probably want to fade it. You just do. You need to protect yourself because this stock hasn't gone anywhere. Not at all. Now, on the island reversal that we went through, it was a gap down. So I wouldn't really short when it's down 2.5% in the morning. But sometimes it does gap down and goes back up. So here's an example from 16th of August. The gap down was something like 2.5%. And it recovers the price pretty well. So it reverses the gap or fills it. And it was a 2.81% move. So maybe if you caught that move up, that's great. But I would actually just try to catch the moves down, because once it filled and it went over a little bit, it then sold off again. It sold off what? Until when? Until 12:30? Yeah. So it sold off until lunchtime and got bought back up a little bit and sold off again. So I just want you guys to know that the bullishness will be reversed. There's very little interest in holding the stock. So as much as it's really important for you and I's net worth, that was 3% move after filling a gap, and it would have been probably an easy call. Like you probably see it struggling at, we always see it struggle at certain strikes, and it's always like those $5 increments. Like this struggle at 235 and immediately just sells off. So that's not the only example. So here on August 10th, it gapped up, and by 10 o'clock, it sold off. And guess when it sold off? It sold off until 1 o'clock, and it was a 3.5% move down. So if you see some type of bullishness, just know that most people are not interested in holding the stock, especially now, especially getting into one of the worst months of the year. And before we broke down and we were kind of holding a level after earnings, but you'd see it the same way. It gaps up and sells off. That's a 2.7% move. It gapped up, it sells off. You can catch it for 2%. It gets bought up, and you can catch it all the way down for another 4%. Like every time it moves up, it just gets completely sold. Like how about this one? So this was a gap. It gaps up, it moves up in the morning, gets bought up in the morning, almost 1.8%, and it gets sold off by 11 o'clock, 4.73%. So the exuberance about what, and look, there are material things that will move the stock. If FSD has like a preliminary licensing agreement with some auto manufacturer, yeah, the stock will probably move up. It'll probably there'll be a little bit of profit taking in the morning. Maybe it'll lose 30% of its move. but it's not going to lose 120% of its move, like on most days that it sells off after a gap up, right? Just understand, like, don't like, and I don't know who's buying. I don't know who's buying the stock because Elon Musk had a really cool FSD drive, version 12 beta with all neural nets. It's completely AI powered, no heuristics. Very cool. All very cool. I was there, man. I was watching it live. I was waiting for it all night long because he posted like the day before. Maybe he'll do it that night, and I waited, and it was past 7 p.m. Eastern time, and I was still waiting, hoping that he'll still do it because I love the company. I love the mission. I love what they do, but the appreciation for what they do by people who matter in the market, it's just not there. As retail investors, we can talk about, oh, this stock is owned by mostly retail investors and not institutional types. That doesn't help you. You need them on board. It's not surprising that Robin from the board of directors last year was trying to, talk to people on Wall Street about, what they're doing, but it's not getting any interest. I mean, out of all the mega cap stocks, I wouldn't be surprised if Tesla's still the most shorted, probably like 3% short interest, where before NVIDIA's earnings, it was like 1%. I know NVIDIA has a lot more short interest now, but before, 1% for NVIDIA, that's an AI company, right? 3% for Tesla? I thought we were an AI company. But are we? I think we need to kind of identify, like, how is this stock trading? Are we really an AI company? Let's look at NVIDIA. Here's NVIDIA with Tesla overlaid, and you can see for the past month, we've been not performing as good as NVIDIA. And this is when NVIDIA has sold off dramatically a couple times, had sold off on earnings. Its entire earnings gain was completely wiped out. But NVIDIA is, going back up, and Tesla is just fighting for its life. And, NVIDIA has 16% on Tesla as far as performance goes. That's not too surprising because if you're being objective, NVIDIA is the real only AI name in the business. As much as we can talk about, Tesla's an AI company, well, yeah. I mean, so if Tesla is making a supercomputer with the most compute in the world, or, maybe a top 5, top 3, or it's spending hundreds of millions of dollars buying NVIDIA H100 chips and computers and all the InfiniBand peripherals and what have you. Imagine if you are a Google investor and Google tells you in a press release or on a tweet, guys, we're building out a data center with a bunch of NVIDIA processors. Do you think the stock should go up for Google? No. What they're going to simply say is you should be doing that already. You should have already done that. Yeah. Okay. You're making more data centers. You already have a bunch of data centers. Cool. That's what you're supposed to do. Your stock's not going to go up 20% because you spent $250 million buying 10,000 chips from NVIDIA. That it doesn't correlate. You can talk about all the compute you want. Okay, Tesla's going to have the most compute out of all these mega cap companies within 2 years. Okay, cool. What does that do for you? It makes full self-driving better, and maybe it'll get released, but you don't know that. You can have a model of full self-driving completely fleshed out, perfect, but you still have to get through regulatory bodies all over the world. So you're going to be sitting on your hands the whole time, waiting for the NHTSA to approve, or whatever body in America to approve it for American roads. And you'll say to me, okay, by that time, we're going to have something like maybe 6 million cars able to use full self-driving. Okay, what is the take rate on that? Maybe let's say it's 25%. Great, you're going to have billions and billions of dollars in basically 100% margin overnight, right? Yeah, but the thing about it is the risk. Institutional investors, all they're going to think about is okay, so I'll buy some Tesla now and it'll go up maybe 10, 20% in the course of, a couple of days. But then you have to ask yourself, the risk is okay, so do I need to worry about waking up every day, to some type of news story where there's an accident and Tesla's full self-driving runs over some dog or some kid? That's kind of if SpaceX was a public company and due to the launch cadence, what are you going to do? Sit on your hands, hoping not you don't have to sell because every launch you're watching live, hoping that the rocket doesn't fail? But that's the thing. That's what people are going to think about this new technology is like the risks that are involved. Is it really worth the gains that could happen from the stock? And then you start to realize like just like with Nvidia, you don't have to buy it right now. Institutional investors, they're not in a rush to buy a breakout. They're in a rush to buy the back tests on the breakout. It goes up, it goes back down, maybe nibble a little bit. And if it keeps going back down, maybe they'll nibble a bit. And if it goes back, down 10%, they'll probably sell. But they don't have to be pre-positioned for the move. Professional traders, they're going to buy that breakout because you have to wonder. It's like looking at this Nvidia chart, and we can go back to where it gapped up on its Q2 earnings. I believe it's called their Q2 earnings, whatever the earnings are back in May, right here. And it has this amazing move. By the close, it's up 28%. And in this time, if you were to kind of peruse Twitter, you would hear people say, "Who's buying that stock? Why would you buy it?" It's like 40 times price to sales or whatever the ratio was. Like it's like the highest. It's like 200 PE. Like okay, but it does get people interested in buying. Within a period of how many days is this? So within 2 weeks, it starts going up, and it goes up another 16.5%. Who's buying there? When everyone else that in real life is like Tesla, Nvidia just went up 30%. This is too expensive to buy now. But it kept going up. If you are buying the breakout and you're accumulating shares throughout the entire breakout before it starts moving up, and you sold it at the first top, you get a 27% move. You get the same move that happened overnight if you're pre-positioned. If you are a Tesla shareholder and it gaps up, you want people to buy it after the gap up, right? You want people to buy the breakout. Someone is buying it. The funny thing is, like, you listen to Tesla, like hyper bulls and what have you. Like sometimes they haven't bought stock recently. Sometimes they haven't bought stock since like 2018. So every time you're hearing about their view on the world, it's just they just want you to buy it when they're not buying it themselves. They want you to buy the breakout. They want you to be their liquidity. They want you to boost the share price of their stock. Everything they're doing is just to take the shares they bought for like $10 and make them as expensive as possible. Let's go back to Tesla and look at the long-term chart. Here's the daily. And everywhere that's highlighted in red is above the current price. And everywhere highlighted in this green-blue color is below the current price. And this goes, and I stopped it back in December of 2020. That's 3 years, 9 months. So this is a time frame from this first red block to the pricing now. This is like almost a 2/3 of a year. And you can see with the red areas that there are more times when the price is above the current price than when the price was below the current price. You only had really, if you're a recent investor of Tesla, you only had this period here of about 250 days where the price was below the current price. But that price before the current price was the same price you're seeing from 3 or 4 years ago. Right? So you're telling me from December 2020, we're at the same price as it is right now. For those 2 years and 8 months, you haven't gone anywhere. If you bought any time around this area, and if you bought in this red area, these red areas, you're down. And you could have bought Tesla on the breakout in January 2021 and be underwater for 3 years almost. All throughout the all-time highs and the beginning of the overall large downtrend, you are nowhere. You're going nowhere with your stock. We're talking about a tech company that's growing, sales at 30% a year, growing volumes considerably every month, every quarter. Now let's look at the S&P 500 on the daily time frame. Here's the SPY on the daily time frame from the same period of December 2020. You can see at the beginning on the left side of this red box, it's up. And this is an index. So if you would have bought Tesla at December 2020, you would have gone nowhere for years. If you would have bought the S&P 500 this December 2020, you'd be up 20%. And you wouldn't have experienced the same drawdowns, the dramatic drawdowns that Tesla did. And you'd be up. You'd be beating all the Tesla people. If you know any Tesla people that were buying at 300 or 400 or 250, you're beating them. And you're not doing anything special. You're literally just buying the most boring thing you could buy, the S&P 500. The reason I bring this up is because there's a lot of people that are selling this idea, not selling an idea, but they have this idea that when you are investing in a company, you buy a couple of shares whenever you can. Maybe you're buying, one share a month. And then you just keep doing that. And then, the results of this company will compound this investment for you. And eventually you'll have a nice little nest egg that maybe you can retire on or retire early or go on vacation with or use it to buy a Tesla. And then you look at the chart and the past 3 years, it just hasn't gone anywhere. So a lot of people say all the time, like they don't believe in, actively managing their investment. They don't believe in trading the stock. Some people even say you can't trade Tesla. They literally just use those words. I don't even know what that means. But it's not helpful. But what you could have done is, with the type of movements that Tesla has, the type of volatility that it has over, the index, as far as the ability to collect premium on this ticker. You're probably looking at this chart and you're probably telling yourself, like, man, it looks pretty safe to sell calls. If you were selling calls all the time, this is an overall downtrend. It is you're still locked in a downtrend. You're still below the trend line. You're not making higher highs. And you need to make this, and you don't need to do anything, obviously, but you want to have your money work for you. But when it's not compounding, when it's not going up, when your investment is going nowhere, or your investment's actually going down in relative terms, especially to other people's investments and inflation, your investment is not that great. If you are an all-in Tesla investor, it's not that great. But it could be great if you're actively managing it. Now, you might say to yourself, I don't have the time to manage this stock. I don't have the time to sit there and watch the stock movement all day long. I don't necessarily believe that. I know there's a good amount of people that invest in Tesla that every day they're watching videos, they're on Twitter, they're looking at the news, following whatever Elon's doing, and being invested at the same time. You're basically tracking the stock, but you're maybe not looking at the chart. You're maybe not looking at the candles every day, but I think you should. I think that's how you could have made this a great investment for yourself. That you would identify that the volatility of the stock is what makes this great. And and the reason for that is because the people that are making money on Tesla, they're the people selling calls, selling puts. Right? They're the market maker types, they're the institutional types. They don't care what happens to the stock. They just care about your liquidity. They just care that you are interested. So I think you should be interested, but at the same time, use the ability to, sell calls against your shares or what have you. What if the calls get, what if your calls make your shares get called away? But we've talked about that already. We've talked about, how to protect the upside risk. We talked about, understanding that selling a call is like buying a put or buying a call. There's stop losses on, you can put stop losses if the shares mean that much to you. Your emotional attachment to your stock is what's keeping you from collecting thousands and thousands of dollars over the course of the year for every 100 shares that you might have. And it can be honestly much more than thousands of dollars. If you time your during like earnings times, like the premium on earnings is insane for Tesla. It's insane. Like you can collect on one call thousands of dollars. I mean, did you look at Nvidia's calls the day of their earnings? I mean, close to the money was thousands of dollars. And you would have made out like a bandit the next day. Those things would be worthless. And you would have collected thousands of dollars on all the calls you sold. And you start to wonder, like, so why did Nvidia's price action look so dire after the earnings? Well, because too many people were long. Like this reversal made all those calls worthless. and they all the people that sold calls could have closed them out right here at on that same day. They could have closed it out and just made bank. And you start to realize is that it's the options that really drive this stock more so than any other ticker, really. Maybe other than the SPX, but you know what I mean. Like when it comes to single ticker, single company, Tesla moves off its options, and that's how you turn this investment into income, because it hasn't gone anywhere, guys. The company can be great, the mission can be great, but if you need a return on this stock, it's up to you to turn that into income. I hate to drill that over and over and over again. It's just that I do worry that, unless you see margin expansion, unless you see the products that they're coming out with get announced, pricing released with, affordability tied to that pricing. If we don't see full self-driving by the end of the year, what happens to the stock? Let's go over some news real quick before I get really lost in it. I've been talking about China a lot because China could be a really big catalyst, not just, and I really mean for the overall market, because we need a little bit of catalyst. Otherwise, you're going to see a very bad September. And now China had a little bit more of a stimulus mostly tied related to the stock market and traders, where they cut the tax on trading stock, something they haven't done since 2008. And they also have some other measures when it comes to trading. They're reducing the amount of collateral stock traders must hold with their brokers. They're slowing the pace of IPO offerings. And the how frequently shareholders of listed companies, they can't sell as much. So basically they're trying to create stability in the stock market, okay? Not so much crazy IPO action, not so much, selling of insider shares, and the ability to really go leveraged on, the collateral for traders. They can probably trade with a lot more leverage. They want the stocks to go up. And you probably heard some little snippets of news on the weekend about how the central government was really trying to have the banks start buying equity in Chinese stocks and companies. They want stability through that. They've been trying to encourage that by lowering the reverse repo rate percentage, so they weren't making so much money in the repo, and to get the money out of the repo and buy something with it. And it kind of created a little bit of a crazy rally in the CSI and the HSI, the Chinese stock markets, with the Shanghai Composite going up 5% in early trading, but by the close of the session, it was only 1% higher. So unfortunately, I don't think people are really sold on the fact that the economy is going to have any upside momentum to it, with the likes of all the real estate companies in China still going down. They're not paying their notes. They're going bankrupt. So you can spur the more trading in their own stock markets, but it doesn't necessarily mean that those measures will save these companies from complete destruction. It doesn't mean people are going to want to take more loans out and buy houses with the thing is they can't do it. Like, you can make money cheap, but people just don't have the resources to pay for another house. I mean, they probably bought a house in the past couple of years in China. The house probably isn't finished, or it's at some crazy, valuation, and they can't afford to have another house. Like, if you can't let them get out of their loans, or if you can't let them refinance their loans, the individual people, the average, ordinary Chinese person, they're really in a tough spot, in a really, really tough spot. And of course, the biggest news, of course, is Elon doing his full self drives. This is his. You can watch it on his Twitter or his X account. He has it pinned, and it was really cool. You can see how it kind of performs compared to full self driving. If you have full self driving, it handles construction really well, as you can see here. This is construction that the car hasn't seen before, and it handles roundabouts really well. It handles. There's two stoplight interactions that are really cool, where at one stoplight, the car noticed that in one lane there was no cars really, and it took that left lane so it wasn't stuck behind a bunch of cars in the right lane. and there was a moment where there was a lot of traffic during rush hour, and the cars were so backed up from the intersection after the one in front of him that they were backing up into the intersection that he was at. And the car didn't proceed forward. It let the light turn yellow and let it turn red and stop there. So there's a lot of really cool things. But what does that mean when it comes to the stock? What does that mean when it comes to a catalyst for some upwards movement? And what does that mean for mainstream media and institutional types? Do they care about this? Do they care about the potential of full self-driving, fully powered by neural nets, AI, compute to the max? Well, let's find out. Let's Google some news to see if it's getting picked up by outlets. All right, let's Google Elon Musk Tesla AI. Let's see, are we an AI company? Okay, this is sorted by date, so it's the most recent. This is sorted by also within the past 24 hours of news. Let's see, anything cool here? Elon Musk FSD demo includes a near miss at a red light. Interesting. And doxing Mark Zuckerberg. That sounds horrible. That's a horrible. That's not even representative of what happened. Tesla's $300 million million AI cluster going live today. Okay, I mean, you made a data center. Congratulations. That's really expected of you. But we want that data center to make FSD possible and become a product that people can buy en masse. Okay, how about any major outlets talking about AI and Tesla today? Nope, just people shitting on Tesla about leaving viewers underwhelmed. Nothing. How about there's only 2 pages, so let's go to the second page. Musk boasts superhuman driving with Tesla's AI, envisions expanding fleet to 10 million cars soon. That's neutral-ish. There's really nothing really talking about AI in some really great positive way, the way that we see AI and Tesla being an AI company. Let's try a different term. Tesla, Elon Musk's full self-driving. Let's just try to get some FSD stuff in here. Let's see. Tesla braces for first autopilot fatal crash trials. This was a trial that was initiated back in 2019, and this was not really about full self-driving. This is just about autopilot. Okay, so that's not cool. Electrek says Elon Musk reassures Tesla Hardware 3 owners, but bums out Hardware 4 owners because Elon says that Hardware 4 equipped cars might have to wait half a year to get access to beta. Not too great. We have a Vice article saying Elon Musk stops self-driving Tesla from lurching into an intersection in demo, and Musk fans cheer. That's not really cool. Reuters is also talking about the trial about autopilot. There's nothing, guys. There's nothing. So what we see as something that was really, really great, no one sees it the same way. And it may be because the idea of AI is, like I mentioned this before, it's not what you think it is. Just because a company is spending billions of dollars, buying chips, what doesn't mean much until it really has a monetizable outcome. And kind of the same reason, Microsoft isn't, going to all-time highs right now, because, ChatGPT is cool, and I think ChatGPT is how the world sees AI. But AI just seems to be like this way to make companies more efficient. And there is no real monetizable story for AI yet. And people don't want to get .comed again. They don't want to have a .com bubble destroy them and destroy the market. So they just, let's just let it play out a little bit slower. Now, we can talk about how, we are, some stocks are up like 100% or 80% for the year. And that's like a bubble. But guys, that's not really a bubble. Like, if you look at from 1996 to 2000, the internet companies went insane. Cisco went insane. So you can look at the ratios or the multiples. But as far as percent gains, I think there's still a little upwards movement you can see in the real AI name like NVIDIA. But the others, there's no monetizable story yet. And we don't have, unless there's a firm date on full self-driving, there is no way that the Wall Street types are going to buy Tesla because of that. They don't know when that's going to happen. It's been and I don't mean to keep going around in a circle, but understand that, you know, when you hear the types like the Wedbushes of the world, they're not controlling trillions of dollars, right? They're not BlackRock, they're not JP Morgan. JP Morgan hates Tesla anyways. But you need people that are managing hundreds of billions of dollars to really get on board. And don't say that, you know, Vanguard's buying. Vanguard's buying because people are buying total stock indexes or mutual funds that track the S&P 500 or mega cap stocks. They're just buying because people just have automatic investments, putting money into a mutual fund or an ETF, and they have to buy stock that matches that percentage of their investment. That's all they're doing, guys. It's just people's retirement making, you know, Fidelity and Vanguard buy stock in Tesla. That doesn't mean institutional types want more Tesla. It's just that the products they offer are making them buy more Tesla. It doesn't mean they want to control more Tesla for any other reason. I really don't think they care. So let's look at the levels real quick before we end the video. By the way, just look at Tesla on the daily. So just on the daily time frame, something we really want to take a look at is, number one, we're kind of getting into like on a stochastic RSI, almost to the point where it might start curling down for being a little bit overbought in this time frame. What happens when it gets overbought? You can see something like, you know, the July earnings crash come through the average and just like sell off for a couple of days. But you can also see it like this from the May to the June kind of exuberance, where it can stay overbought for a very long period of time. And I think what you want to do is kind of match up the stochastic with a regular RSI and see the RSI is very, very low. Maybe not the lowest it can be, but it's not that great still. And there's still upside when it comes to RSI. What I really want you guys to look at is MACD. And the MACD is starting to curl over and curl up. And that could be a good sign. Okay. I mean, it's showing how long we've been really oversold. Even though the earnings were in July, it wasn't like we were getting great action. And you can see a lot of red. And so you can see that at that point in time, the MACD was coming down. And the last time it curled over successfully, meaning that it went up through the average and stayed above, was when our rally started in here. When our rally started in May. So if you can get a little bit of buying, you might be able to crack 240, close above 240, and start moving up. Okay. Let's look at it on the monthly time frame. This is something I also want people to be aware of, is that we're kind of flirting with, on a large time frame, curling over on MACD. And the last time that happened probably hasn't been for 4 years, right? When it started really moving up, when Tesla is becoming more profitable, that's when it started curling up. We're fighting it right now. You can see how it's kind of staying below the orange line. But if you can get above it, maybe a week of good buying. It might not be this week, because we know this week has very low volume, but also at the same time, low volume doesn't necessarily mean that stocks will sell. It's just that there's just so much little action. But the lack, that kind of like vacuum of volume could move the stock up a lot. I just think that more people are wanting to be delta neutral until we get into September, where they might turn a little bit short and go long, but more of a neutral for Tesla this week perhaps. Okay, let's go back to a smaller time frame. One thing I want you guys to see is I started putting the expected move for Tesla on our chart here, based off the options of last week. So this is something calculated on Friday at the close. The upper is going to be around anywhere from 249 to 250, and the lower bound for the expected move will be around 229. So we're still right in the middle, just because obviously we closed just barely green today. But this is what you kind of want to work with. Let's say, okay, that the MACD on the daily time frame is curling up. Fantastic. Awesome. We're really oversold on the RSI, kind of oversold, but not really. What you might get one day of green. Like, what is, if it's really, really great? What we always wanted, we wanted to see a close above 240. We saw 242, 243, 244, but no close. So all I'm asking for is a close above 240. We can get rid of these green lines. delete. Let's draw what I want. Look, all I'm asking for is you get above 240. You can dip below it tomorrow, but I want a close above 240. I'm not asking for too much. Something like that. I just want a close above 240. But if you don't get it, how many times have we rejected off 240? It's just too many times. And it's either gonna go one way. It's gonna be so this is our ascending triangle that we drew in these pink lines. I'm still glad we're above it, and that's good. But we really want to close above it. We want to close above 240. We want no humongous pullbacks anymore. Get out of this triangle. Price seems rather compressed anyways. Get out of it, close above 240. Because otherwise, if we're not getting a close or if we start selling off, I don't even know. Like, do we see the lower EM by Thursday? It's very possible that there is a D-risk for PCE where it's like, and by Thursday, it's like, oh, down here. We don't want that, obviously. But we also know that, Powell kind of leaked his expectations for the inflation report this week. So maybe it's not going to be too bad. I think expectations are 4.3 or 4.2 on core. So, of course, we want 4.1. But we'll see. So what we really want is a close above 240. That's all we want. We want to close on a day above 240. Anything else is gravy. Just know that the levels at 245, 242, 240, basically at $2.50 increments, but especially at $5 increments, it's going to be really tough. So 245 might be a tall order. And in the upper estimated move at 249, that might be very, very difficult as well. But it's hard to see the catalyst for that, right? In that time frame. But anyways, sorry it was so long. Thanks so much for listening, guys. And let's just hope that we survive the overnight and pre-market. If it gaps up really big, if you're seeing 240 something again, just consider what I talked about earlier on in the video. Thanks so much, guys, for listening. Have a good night.